And Friday marks the end of a rough week for the banking industry. Reuters estimates U.S. banks have lost over $100 billion in stock market value over the past 2 days. The FDIC, which insures deposits and supervises financial institutions, also took control of Silicon Valley Bank and its $300 billion in assets and deposits. It's the largest bank to fail since the 2008 financial crisis.
But we begin with the economy. Stocks tumbled today as fears grow over the stability of the banking industry now that 2 U.S. banks have failed.
Now a major European bank is also in trouble. At one point, shares of Credit Suisse fell as low as 30%, dragging international markets with it. Meanwhile, the Saudi National Bank, which is the biggest investor in Credit Suisse, says it would not provide any more funding. That sent the Dow and other U.S. markets into the red at the opening bell. Fears over the stability of the international banking system wiped out any gains made yesterday. CBS News correspondent Elaine Cobb is following the story from Paris. So, Elaine, what started this decline in Credit Suisse shares?
Elaine, Credit Suisse has been dogged by scandals for several years. It's been accused of tax evasion, subprime fraud, and setting up fake accounts. Last year, it was named in a criminal trial for money laundering. So it's had a hard time keeping its customers happy. They have been fleeing as they lose confidence. It's the second biggest bank in Switzerland, but it is struggling. It said it has learned its lesson and taken the medicine, but even a major restructure hasn't helped. And clients in the last quarter pulled out a whopping $100 billion worth.
Elaine, what is the larger impact that this is having on European markets, and how far might these ripple effects continue?
Lana, while this isn't directly linked to the SVB crisis, it's already had the market skittish. So when this happened with Credit Suisse, it just sent European markets tumbling. Here in France, BNP Paribas and Société Générale, the 2 top banks here, lost more than 12% in their share prices. Deutsche Bank in Germany, Barclays in Britain are down 8%, and Europe Stock 600 is down 3% as the euro struggles against the dollar as well. And all of this is coming at a time when Europe is worried about perhaps a new recession. As the energy crisis continues, people worry about rising prices and their spending power and soaring inflation.